My name is Yosif, Assistant Vice President for Economic Policy and Research at ICBA. Today, we're going to look at the FDIC's Quarterly Banking Profile for the third quarter of 2019. Bank industry fundamentals experienced stagnation over this past third quarter due to higher than expected non-interest expenses through realized securities losses concentrated among some of the industry's larger financial institutions. However, many of these losses were mitigated by another strong performance by community banks, which posted steady gains in their deposits, loans, and asset quality. Deposits at community banks increased by 5.9% versus 5.1% at non-community banks. This growth was mostly driven by interest-bearing deposits, which grew by 5.8%, as well as some non-interest-bearing deposits, which grew by 6.2%. Overall, though, nearly 75% of all community banks reported an increase in their total deposits. Lending, likewise, also increased at community banks by 1.3%, versus 1% for the rest of the industry. Community banks took advantage of sustained momentum within the U.S. housing market, as well as increased construction spending to bolster their non-residential, residential, and C&D loan portfolios. This enabled 63% of all community banks to report an increase in their overall lending portfolios. The non-current loan rate at community banks decreased by 3 basis points, whereas the non-current balances among community banks remained relatively flat. This was due to the fact that non-current balances among agricultural loans as well as C&I loans increased, offsetting any decreases in non-residential as well as commercial loans. Net interest margins at community banks decreased by 5 basis points in light of more expansionary economic policies to curb a slowdown in global economic growth. This, in conjunction with realized securities losses concentrated among some of the industry's larger financial institutions, caused net income for the banking industry to decline by 7.3 basis points. However, this wasn't the story for community banks. Community banks increased their net income by 7.2%, as well as their quarterly ROA by 3 basis points. And overall, 70% of community banks reported an increase in their net operating revenue. Finally, the industry's overall performance enabled the DIF to rise by 1 basis point. This means that smaller institutions like community banks will continue to receive their assessment credits. That's all for now. Be sure to check out our website, icba.org, for the latest in economic and policy research. Thanks for watching. We'll catch you next time.